It's the Los Angeles real estate market versus the presidential election. Yeah. It's the Bitter Realtor Podcast. We're talking about all things Los Angeles real estate. If it's got four walls and a roof, we're talking about it bitterly. Welcome back to the show, everybody. It's the Bitter Realtor Podcast. I'm your host, Joey Rockenstein, and still electing to ride shotgun on this voyage, Scott Goldman.
Hello, bitter people, running for president.
It's so good to have you guys here. We have a great topic for you and fitting for this time of year, Scott.
Yep.
We're going into the presidential election. So what does that mean for the real estate market going into the election? Yes.
Uncertainty.
Absolutely.
I got it right.
Now, this is a very unique year. And by the way, this show is first and foremost not going to be political. We are
apolitical.
Right. All right.
Yeah.
We are amoeba political. So we want to talk about what we talk about, which is anything with four walls and a roof. But this happens to be an election year, and we are getting right into that in a little over a month. So what does that mean for the real estate market? Now, traditionally, things do normally happen in an election year with the real estate market, like interest rates tend to trend downwards once you get closer to the election. Sales tend to slow down because of what Scott was just saying, because of uncertainty. But
well, things have been slow because of interest rates for about the last year or so.
Absolutely. I would say this summer was, for me, slow.
You've had maybe one of the tougher years that I know of for you.
Yes. Definitely a lot of anxiety has developed over this year. Sleepless nights. It's just been a good time.
Yeah. The only people that are going to end up making a lot of money in this next cycle, we should call it, I believe are the mortgage brokers who are going to start refining all the higher rates that are now starting to trickle down. Last week, just as a matter of course, we had a half bip down, tick down.
Correct.
So we were at about roughly 8, maybe 7 3/4. Now we're about a 7 1/4 for preferred borrowers. And it's starting to trend down.
Absolutely. So that's why I feel like this year is a little bit different compared to the other election years that we've had, because there's been such high interest rates, there's been such high inflation, and things have finally started to calm down a little bit. The Fed finally stuck to their word. The old gross white guys finally decided to make that cut in the Fed rate. But let's talk about that for a second, Scott, because I think there's actually a lot of confusion about what it means to cut the Fed rate versus people thinking, oh, they just cut the interest rate.
So the Federal Reserve decides what the cost to borrow money is. These are the rates set by the United States Bank, but the United States Bank, the Federal Reserve, is really another apolitical arm of the government. It's almost like the fourth branch of government.
Correct.
But it's not, it's an independent body. And when they set the interest rate, the banks then make a decision as to what they're going to do based on that rate. So a rate cut, listen, a bank can loan money for whatever they want to do. There's private money out there. There's bridge lending. They can do whatever they want. It's their money, their rules. But the market, the money market is very highly regulated, as illustrated by the Fed setting the rates. So.
What does the 10-year Treasury have to do with the interest rates?
Well, the 10-year Treasury, so only 20 and 30-year mortgages are non-adjustable. A 10-year note is an ARM. It's an adjustable rate mortgage, unless the bank's carrying it for 10 years at a normal mortgage rate. So most mortgages last 30 years. The 10-year Treasury note determines what those 10-year rates go for.
Got it.
So, if I'm a preferred borrower, a shorter term on borrowing money might cost me less, like an interest-only loan, for example, as opposed to a 30-year amortized loan, which you notice because you have your mortgage calculator, as you start to pay into it, the payments actually start coming down
Right.
about year 12. So
Now, what is the preferred borrower versus non-preferred borrower?
a preferred borrower is, it's the irony, right? A preferred borrower doesn't need to borrow money. Usually a preferred borrower has enough asset to offset whatever loan they're making. Now, again, because of regulations in the mortgage market, you really can't cross-collateralize your properties. But if you were a developer, for example, and you needed a line of credit and you wanted to go out to a bridge lender, you could cross-collateralize. Let's say I had 4 properties and they were all free and clear. Usually the bridge lender and the bank will give me a certain loan to value on those properties, typically between 70 and 75%,
Right.
based on how much equity I have in the property. So if I have $1 million property and I've paid it off, usually the bank would loan me up to $700,000, maybe $800,000 just on that asset.
Got it. So there's some weird nuances in the real estate world with preferred borrowers, people who don't need to borrow the money per se. The Fed was waiting for unemployment to go up before making the cuts, so then they made the cuts, so now that's going to influence the interest rates. So now people are out of work, but then the interest rates are better.
So it's a balancing act, right? It's a seesaw.
Right.
And you've got a 600-pound dude on one side of the seesaw, and you got a 170-pound dude on the other side of the seesaw. It's a problem. But if the guy on the 300-pound side starts losing a little weight, then we see the teeter-totter, it starts to
Right.
even out. But one thing we're going to see now is rates trickle down, we're going to see prices go up.
Correct. Because that's just going to increase competition, which is what we've essentially been talking about for the past year, where if you had the means to buy, it's better to get in when there was less competition and be able to get a price that was more reasonable, have a high interest rate, and then refinance
When the
down
rates
the road.
come in, and it's interesting you say that because inventory, at least in our market, is still an issue.
Correct.
So it's not just a case of supply and demand. Typically when demand is high and supply is low, prices go up. We have a low inventory. For example, we have a condo listed right now at $289,000. We listed it at $289,000 because the rates came down. We've also noticed that there's some challenges getting people to spend this kind of money in the condo market. The condo market has gone a little soft
Yeah.
in our market.
Completely different animal.
Very different animal. But on the flip side, Joey's listing in his neighborhood, I don't think you were on market for a week before you got under contract. So
Pretty quick.
yeah, it was very quick. So the market for homes is strong. The market for homes that need to come down and be rebuilt or at least torn down to the studs is strong. And I think when the feds keep cutting the rate, which they will now do, I think home sales are going to get strong.
So that's interesting because traditionally in an election year, home sales slow down or come to a pause, if you will.
Typically.
So let's talk about that because of the uncertainty. Like obviously somebody's going to win the election. So people don't know, what each candidate is going to do as far as how they're going to affect the market. Like I know both of them are talking about tax incentives. Both of them are talking about, changes in rental policies. So how...
One of them is talking about how to make it easier for first-time home buyers.
Correct.
How to provide them with the right kind of, tax credits or write-off to achieve that first home purchase. It's very difficult to buy a home unless you've got wealthy parents.
Which is how a lot of younger people have been getting
Not
into
us.
homes.
Not
I
us.
don't know what that means.
No, I don't know.
But yeah, so with that uncertainty, which is normal, like I said, but I kind of have this weird feeling that since rates have been coming down, the Fed got off their ass and made that cut, I kind of think that the normal holiday slowdown isn't going to happen this year. I kind of think that we're going to there's going to be a little bit full steam ahead maybe.
I think Well, again, we're going to be apolitical, but I think if the right candidate gets elected, we're going to see a lot of optimism flow into the market. I mean, basically, I'm just going to say this. We're either going to have a democracy or we're not. This is an election to decide whether we're going to have more elections, I think. So, whatever the case is, people still want to buy homes.
Right.
We still have a market that moves. There's still lots of people who are looking, actively purchasing. There's lots of stuff in escrow. Our particular brokerage has quite a large listing portfolio at this moment.
Right. I mean, the last meeting, there was a ton of new listings that had come out.
Yeah, so
between all the offices.
There is more inventory flowing into the market.
I would say the buyers, you do kind of have that slight advantage, weirdly, even though we are still very low in inventory, but you have more to choose from, and you have a little bit more leverage in what you can pay for it, because we are seeing the green down arrow in the MLS.
Yes, we are.
So
the red down arrow.
It's green.
The green is the arrow's down.
Red is up. Red is up.
I'm gonna have to go look at that.
Oh
now.
my gosh.
I thought red is down, like we lowered the price.
Now don't second guess this.
Oh,
it's green arrow.
Now
down.
I'm gonna go look. There's also the media, right? I think the media, unfortunately, I hate to give the mainstream media so much credit, but they do play a very large role in the way people behave.
The media is the red arrow.
Yeah.
They're constantly harping
Cherokee area.
on the Fed rate. They're constantly, bringing up the fact that interest rates were so high for so long, and it was really like hurting everybody, which it was, but people just didn't know how to react to it. Like, people didn't know, and everybody hates hearing this, but it's the truth, that a 7% interest rate was very typical throughout the decades, which you can go and watch our very boring show about that we did.
Yeah.
So
it was a long one.
Yeah. But that's the thing. Like, the media just made the interest rate seem like like the devil.
Oh well, they really did put the kibosh on everything, and then on top of that, they really went pimp crazy on the NAR suit. People got whatever they got from those stories. They typically didn't get the right information.
Not. I would say the majority did not know what was really going on.
No, and we know that because we actually still don't know what's going on.
I mean, as far as we're concerned, it's kind of like the same old story,
Status
just
quo.
with one different contract.
Yeah, and the brokerage, our brokerage, has done a really, really fine job of making sure the agents here have been proactively moved in a way to be ahead of it all.
Right.
We just did a listing agreement yesterday, and now there's maybe 9-10 different forms that go into it, but it's very straightforward, and the brokerage did a great job.
Absolutely.
Yeah.
It's interesting you talk about the optimism. I feel that there's going to be optimism. Well, there is optimism for each candidate. Like, they each have their own pool of fans and people that really love them.
Yep.
So I kind of feel that no matter what happens, that the market is going to flourish from that, just to move forward from the election, I think, in general.
Oh yeah, I think that the election's behind us, and people are going to feel a brightness.
Right.
They're going to feel like, I can see clearly now the rain is gone.
Oh, there you go.
I can see clearly now the election's over. I don't normally quote Three Dog Night, but shout out to Corey Wells.
Do we owe him
he passed away, sadly.
no,
But he produced my first record.
It's not a copyright infringement?
No, maybe. I don't know. Don't send me a cease.
Don't sue us. We don't make any money off this show.
How do we get a cease and desist from somebody who's ceased to exist?
That would be amazing.
I would be really impressed, yeah.
So we're talking about how the election influences the market.
Yeah.
So I want to get back to like the media influence, because it doesn't really seem to shed any positive light on anything in general. But they never kind of like highlight that stats that we bring to our office meetings. Like there's nothing about like, oh, there's more inventory, there's more sales going on during the month-to-month basis. They're constantly focused on how bad the interest rate was. The Fed's going to make the rate cut, they're not going to make the rate cut. So I think it's just a matter of you guys really need to reach out to your local agent to get some insight of what's actually going on in your market.
And to pile on that, your local agent who you work with, maybe it's Joey or I, we also have access to professional mortgage people, literally at an arm's length, who have all the most up-to-date information. They're the ones with all the great products to help the home buyer
Correct.
Get the home bought.
And different lending companies have different programs. So that's why it's always a good idea to maybe talk to 2 or 3 different lenders in different companies, because you don't know what kind of programs they'll have available to you or what you might qualify for.
In my Calabasas office, we have a gentleman named Bruce Nangle, Julie Rojas from Guaranteed Rate. They are our in-house preferred brokerage lender, and they do a great job. So I recommend, we use Bruce to cross-qualify all of our listings. So Bruce is our cross-qual. We also have this guy for our 5460 White Oak listing, Brian Minkow, not to be confused with Barry.
Barry Minkow?
Z Carpets. Yeah, he got in big trouble.
Oh, man.
So Brian told me, don't ever call me Barry.
Got it.
All right. I did put Barry, Brian's not Barry. Brian's number is in our listing.
I saw that.
Okay,
yeah,
good.
I did see that. I think it's always a good idea to cross-qualify just so you have an idea of what, if the buyer's legit or not.
That's right.
I find it interesting that you call them the preferred lender. Like, do they only work with preferred borrowers too? Is that like the same type of thing?
No, I think like every major brokerage, whether it's Caldwell or whoever, Compass, they all have like an in-house,
of course,
preferred mortgage person. They typically, Bruce has a desk in our office. Julie has a desk in your office.
Understood.
So it's good. It's from a standpoint of what you and I do. It's not like we have to get on the phone and start dialing for mortgage dollars. We've got somebody literally
right there.
Right there.
Yeah, of course. Absolutely. And if you guys need help finding a preferred lender, you guys should reach out to me and Scott. You can find our contact info in the show notes and creepily right behind me. That's how we like to do it. Because, we are here not only to help facilitate your real estate transaction, we're also here as a resource. So even if you're not using us to make a sale or a purchase, reach out to us as a resource, because we have access to lenders or even other vendors that you might need if you're already a homeowner. So think about that. But if you have any questions about anything that's going on in this presidential election that's going to influence the real estate market, again, reach out to me and Scott. You find all of our contact information in the show notes below, and reach out to us to make a transaction, because you know what? You can reach out to us as a resource, but we prefer to be reached out so we can make money.
We'd like to help you sell.
Money is fun. It's good. I like money.
We like to help you sell your home.
And as always, guys, you can stream Bitter Realtor on any platform that you stream. Apple, Spotify, Stitcher. I don't know. It's there. It's like, it's a thing.
It sounds like...
But people use it.
It sounds like a dating site. You swipe...
Well,
I like that house, I don't like that house.
Well, swipe right for the Bitter Realtor podcast when you're on Stitcher, please. For Scott Goldman, I'm Joey Rockenstein for the Bitter Realtor podcast. Why am I bitter? Because I'm a realtor.